Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Yesterday's market picked up volatility big time. We saw a huge sell-off early in the session with the S&P down about 1.8%, the NASDAQ down 2.5%. And then we saw the big reversal as Chairman Powell was talking. And as we've seen over the months, and I warned you last night that somehow, some way they were going to come up with some sort of bullish statement, something that would turn the market around. Really, Powell didn't say anything different. The interview that he did wasn't much. And the Fed continues to be in this crazy dilemma. And as I've talked about before, they keep telling us they have lending powers, not spending powers. But while I was watching Powell talk, I realized it reminded me a lot of the movie Speed. Take a look at this and just think about this for a minute.
There's a bomb on a bus. Once the bus goes 50 miles an hour, the bomb is armed. If it drops below 50, it blows up. What do you do? What do you do?
This really is their dilemma. They've got the foot on the pedal. They can't let it drop below a certain speed or the thing blows up. This is exactly the dilemma they're in. That's all fun and games. In the end, market participants continue to believe that the Fed will keep their foot on the pedal because they have to, or it'll blow up. They all know that. And so this is why we saw that buy the dippers come in and the market's reversed substantially. But the real question here is, will this reversal actually last? Is this the turnaround? The market's traded down below some of the support levels that I discussed in yesterday's video. I thought we would see some further weakness, and then the big reversal happened. And I'm going to go through in the details and the technicals here in a few minutes on why I think maybe it's just not over yet. We may get a couple-day reprieve, and there's more information needed before you make a call on that yesterday's spike low or reversal pattern is real. We're seeing some weakness overnight, so this is telling us that there's not a lot of confidence in this thing. It's not a runaway. I'll set up some of the key levels that we're going to need to watch on Wednesday. Now remember, I have the live stream on Wednesday, so I'll be going through a lot of details. There's actually a lot to talk about. Last time I spent a lot of time on MMT, modern monetary theory. I believe the talk around the Fed doing digital cash and all types of other elements, this is part of that MMT platform. Powell was very careful, extremely careful, to make sure he didn't comment on the stimulus package. I thought somehow he might tie it together. He might say something that would do more than that. But I think without saying it, he did say it. And that was the interpretation of the markets. As we go forward, we're going to find out what the realities of this situation is. We'll see if there's anything we can derive from the next couple days. But make sure you come to the live stream tomorrow. There's several things that I'm going to discuss, I think, that will help you to understand more about what's going on, at least in this current configuration. I'm not going into politics, but we're continuing to see no focus on the stimulus checks, right? Remember, there was supposed to be $2,000 out immediately. I should put up another movie clip of Jerry Maguire when he said, "Show me the money." No one sees the money. They're kind of dancing around about a lot of issues, but this is not a good thing to base market strategies on. One of my early managers when I started in this business used to always say, hope is not a strategy. If you find yourself saying, I hope it gets better, he used to always say, you better be getting out. And it feels like to me that the markets are hoping for a lot of things to happen. And I think there's going to be much more consolidation before we move forward. The other thing to talk about today, we do have about 220 earnings reports coming out. There's some substantial players coming out, some before the market opened, some of the big ones also after the market closed tomorrow. So we're going to see a combination of some action tomorrow and also coming into Thursday morning as we come into the claims and the continuing claims, which will be the big event on Thursday. So let's go ahead and take a look at the charts, see what they're telling us for Wednesday. As we begin with the WaveTech database, I say probably the best for this section is we did see a significant amount of selling coming into the database. There were 1,323 sells, 232 buys. The net sells around 1,100, dropping the database below that level I talked to you about all the time at 42%. We finished at 39.5%. Now, while this is just a slight breach, we're likely to see continued liquidation with the database going back to where it did before this last rally attempt, which was 27%. It's exactly where we got. If we get below 27, a full liquidation. Now, I mentioned this in the last several videos that we are exactly 1 year ago this week was when the big decline started. And we're seeing some emotion coming in. No one's really talking about the things. But what we're seeing here is some of the things that Chairman Powell talked about was there's still 10.7 million people out of work after this thing. That's how many jobs have been lost in the last year. And most of those jobs are in the lower end of the economy, and most of them in the service industry, restaurants, hotels, you know where they are. These operations aren't running and no one can go back to work, and it's absolutely devastating what's going on in the industry, including airlines and anything that has to do with humans hanging out in a very condensed space, right? We know that. This is driving the narrative in the markets, but it's also, I believe, starting to concern market participants. There's starting to be a little more negativity. They're waiting for, as I mentioned in the opening comments, show me the money. Where's the money at? There's no stimulus. There's not any material things happening to plug any holes right now. So that's why when we come into the claims numbers this week and the continuing claims, they might have some impact. I'll cover that more in tomorrow night's video, probably talk about it a bit in the live stream tomorrow. As we review the S&P 500 futures, just in a few minutes that I was doing the front end of the video, things have changed substantially. The futures are now down 22 handles on the S&P. We're seeing quite a bit of weakness. We're trading back below the 21 period moving average. Let's take a look at yesterday's action. We did see a sharp reversal. I talked about trading down to the 40 period moving average down at 38.17. In fact, there were some numbers there. There were some key numbers on the market grid at 38.23. The moving average was at 38.17. We spiked all the way down to 38.04 on the futures and then reversed sharply, trading up to the highs of the day at 38.96. So it was an impressive rally, to say the least. And what I was referring to in the opening is, can we follow through on this reversal pattern? And for that to happen, there's a couple things that you would have to see in today's action, which would be the market trading up through yesterday's high, which was 38.96, and closing plus on the day. Now, that's still a possibility. What we're seeing right now is suggesting that doesn't look like it's going to be a possibility. And in fact, if we close under that 38.59 level, that's going to be important. As we look at today's market grid, you're going to see S1 was 38.63. We've taken that out. We're trading down toward S2, 38.47. The low so far, 38.51. Last trade, 38.54. We're about 40 minutes away from the opening of London. And what we're seeing here is the market is under a lot of pressure all of a sudden. These are the early London crowd coming in, and it doesn't look like anybody's really all that positive. And as I mentioned in the opening comments, Powell really didn't say anything positive to cause the turnaround. It was an interpretation and just everybody's stampeded in. And one of the things that we see in current market environments is something that I've seen in the past, which is these stampede in, stampede out type markets. Everybody's leaning the same way, and it just sways back and forth, and you get these very choppy markets. And what we saw out of yesterday is we did see an expansion of the market grid or the volatility, which is also important to understand that we're getting a little bit of a volatility spike here, but the next couple of days are going to be really key. Let's go to the SPX and take a look at the cash, and you'll see the reversal that we saw in the S&P cash was really quite powerful. We saw the high-low of 38.95. We went out at 38.81, so a bit off of the highs, but we did see that print all the way down to 38.05 on the cash. So this was substantial. As we look at the PPMs, they're going to accelerate down more if it comes in as it is right now, of down about 0.5%. We're down 21 handles right now. So this is definitely going to keep some pressure on this market. And the key numbers as we look at the market grid for tomorrow are going to be R1 38.92 and looking at S2 38.57. If we take out 38.57, we'll see a move down toward the STX number, but we have to consider yesterday's spike low at that 38.05. This will be a key number in the pattern. If that's taken out, we actually have to go to the weekly charts to try to figure out what the next level would be if that is taken out. So the key will be for today, if we can close higher in the session, that will confirm the reversal. We'll get at least another day or two up. We'll move back into some resistance numbers, and those numbers will be likely moving back into the 39.15, 39.29 level. The 39.15 level has been a pretty rock solid level as far as resistance goes. So my expectation is on the daily basis is that R1, S2 possibility of going down to STX if it gets through that level. On a weekly basis, you can see 38.11 is STX on the weekly. So there's really nothing below that number that you can see. I'm going to go to the monthly chart to see if there's anything there that we could look at. And really there isn't. We're trading into the resistance zone from last month. So we're positive from last month's close. First S1 numbers all the way down at 36.59. I do not see that in play at the moment. Next market I'll cover is NASDAQ. It's down 114 handles right now, down 0.9 in the session. We're seeing it struggle to stay above the 40-day moving average. But we did spike through the STX number yesterday. As we look at the grid, the STX number is 12,936. We had a low of 12,757. And I've been talking about the possibility of going down to 12,500. So we went through all the daily averages. As we look at expectations for today, just like in the S&P, we're looking at, we've already printed an R1, looking at an S2 minimum. We're looking at an S2 possibility of going down below 13,000 again, testing 13,004, possibly printing down to STX. And as I mentioned in the S&P, the same thing is important. The low yesterday in the NASDAQ futures was 12,757. That number is going to be a number to be watched over the next couple of days. On the upside, we're going to need to close back above at least the 40-day moving average, 13,227. That's around the high of the session so far today, so that certainly is a possibility. But then we have resistance, 13,458, 13,534, and you also see R3 for the week is 13,494. So there's a lot of resistance between 13,400 and 13,500. So this is going to keep the markets in check. Just a quick comment about the PPMs. We are now on a daily basis on the NASDAQ at a minus 0.45 on PPM1. That suggests that there's going to be substantial resistance as that number starts to come down, and it's going to walk right into the zone I just mentioned. That 13.5, 13.400 level will be major resistance at this time. The next market that I'll cover is gold. Yesterday, we were able to maintain most of the rally that we saw on Monday. We're remaining above the 10-period moving average. We're not really getting any traction. When we look at the PPMs down below, they're not really accelerating here. There's still resistance at the 21-period moving average, 18.19. We've seen this 18.15 level be pretty substantial resistance over the last 3 days. If we look back two sessions, the high was 18.12. Yesterday's high, 18.15. So far today, 18.13. So if we get above that, then there's going to be resistance right at that 18.19 level, which is the 21-day moving average, and that sets up the potential to move up to the 40-day moving average, which gets us up to around 18.41. We take a look at the weekly charts. What we'll see here is that elements are very well defined from looking at the market grid. Around the 1812 is R2, so we printed that, the high 1815 I just discussed. Possibilities of 1830, 1847, also 0.236 retracement level of this entire decline that we've seen is at the 1841 level. So there's going to be some resistance there. So that'll put us between R3, RTX. The structure that we're seeing in this market on a weekly basis continues to be relatively bullish on a longer term basis. We're just not in position to turn this thing around just yet, but it's not going to take a lot. If we can stay stable for at least another week, possibly start trading above 1840 to the 1860 level, it's likely that we'll trigger a turnaround. We'll see a trigger point and then maybe moving back toward 1900 and beyond. But for now, we've got just a ton of resistance right at the 1839 level, which is the 10-period moving average, which has a PPM1 at a 0.47, tells you there's only a 30% probability for the market to go above that 1839 level in this pattern. So we'll probably see that be the cap if we can get a further rally. Otherwise, I just see the market trading in this sideways range with an inside bar from last week, because we had a decent range last week. So we'll continue to watch this as we get closer to Friday. I'll talk more about this. This will complete the video for tonight. Make sure you show up at the live stream at 1:30 New York time tomorrow. Hey everyone, thanks for watching. If you enjoyed the content, make sure you subscribe, hit the like button, and hit that notification bell so you'll know when I post my next videos and when I do my live streams. Thanks again for watching.